Bitcoin and the entire cryptocurrency market has been red hot over the last 2 years. However, it looks like at the start of 2022, Bitcoin might be starting to cool off. In fact, it reached a 4-month low of just under $40,000 per coin on January 10th, 2022. And in the final month of 2021, Bitcoin actually went from around $50,000 per coin all the way down to around $42,000. So it has been dropping for a while now. And now that it's early January 2022, a lot of experts are saying that Bitcoin and the cryptocurrency market in general can go one of two ways. It can either explode and boom to new record highs, or it can essentially crash to new record lows that we haven't seen since 2017. Now, since Bitcoin has done nothing but crash over the last month or so, I wanted to take a minute to talk about exactly what is going on here in the cryptocurrency market and how this is all going to play out in 2022. We're also going to be talking about Bitcoin specifically and why it's starting to drop right now. So if you are a cryptocurrency investor and you've got your eye very close on Bitcoin in general, you might want to stick around till the very end of this video because we're going to be talking all things Bitcoin and this most recent crash. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. And in other news, this very channel is going to be known as Market Briefs on February 1st, 2022. And we've got a ton of other super exciting announcements on that date. So be sure to come to this channel on February 1st to see all of the brand new changes. But let's talk about Bitcoin and the cryptocurrency market. So why exactly is Bitcoin dropping right now? Well, Bitcoin and markets in general have been dropping for about a month now. And the reason being is because of the Federal Reserve and fear over inflation. And they're kind of working in tandem here. You see, the Federal Reserve is an entity of the United States that is in charge of monitoring inflation and our monetary supply and monetary policies all throughout the country. They basically make decisions that will either help or hurt inflation and our economy in general, at least from a financial standpoint. So, as we all know, inflation has been booming and exploding over the last 2 years. In November of 2021, inflation hit a new record high of around 6.8%. Now, this is all in accordance to the Consumer Price Index, or CPI. The CPI is an index by the Labor Department that shows how prices are going up or going down every single month in the United States. And then it takes a general average of all of the price increases or decreases. And like I said, in all of the industries in the United States, we saw prices go up by around 6.8%. That is a lot, considering usually inflation is only around 2 to 3%. So with inflation being so high right now, in fact, it's at its highest point in over 40 years, the Federal Reserve is getting aggressive in combating how it handles inflation. And that is bad news for the cryptocurrency market and the stock market in general. Basically, the way the Federal Reserve is going to combat inflation is by reversing a lot of the policies that it's had over the last 2 years. It will now start tapering all of its bond buying and asset purchasing on Wall Street. The Federal Reserve has also announced that it's going to raise interest rates in 2022, and it's going to pull a lot of its money printing and stimulus from the economy in general. Now, the cryptocurrency market doesn't really like that because it shows inflation is a big problem, and we have seen the market crash ever since the Federal Reserve has started to make these announcements. Basically, when the Federal Reserve starts to get aggressive like this, that means they're pulling a lot of money out of the economy. And when we see money coming out of the economy, all markets start to shrink. There's not as much money, and investors want to protect themselves and they want to hedge against inflation. That has been a big problem in the Bitcoin and cryptocurrency market, though. Some investors aren't convinced that Bitcoin is one of the best hedges against inflation. A lot of institutional investors are turning to gold and silver and a lot of these other types of commodities and equities. And just last week, the Federal Reserve announced that that it's going to get even more aggressive on inflation. So that could mean even more interest rate hikes and even more tapering of all of their bond buying and asset purchasing on Wall Street. Bitcoin investors are kind of anticipating this move by Federal Reserve Chairman Jerome Powell when he goes before a Senate nomination hearing on Tuesday. He's expected to talk all about inflation and what the Federal Reserve's plan is for inflation in 2022 and beyond. And a lot of investors are anticipating him saying that there is going to be even more moves by the Federal Reserve in order to curb inflation even more. And part of the reason that we know this is because the Federal Reserve has done this before, and every single time they've talked about tapering and every single time they've talked about raising interest rates, Bitcoin and other cryptocurrencies have started to drop. And that's because no investor in the world likes inflation. Now, inflation is when a country's monetary supply starts to go up. So when the United States Federal Reserve actually starts printing a ton of money, you can start seeing inflation. Now, there are symptoms to inflation. It's not just the money printing that is the problem. If it was in a vacuum, technically money printing isn't really a problem. It's when people start to spend all of that money that becomes a massive issue. So investors basically have to decide whether they're going to continue to put money into an asset that is very risky, like cryptocurrencies, or if they're going to sell their investment to get cash so that they can buy other assets. And right now, that is part of the reason why you're seeing so much volatility in the cryptocurrency space. You have a ton of investors who are worried that inflation actually got worse in December of 2021, and they're starting to sell off their assets. And like I said, the cryptocurrency market is extremely volatile, and there's a few different reasons for this. For one, there are a ton of beginner and new investors in the cryptocurrency space. I mean, Bitcoin hasn't really been around that long, and because of how Bitcoin and other cryptos have exploded over the last 2 years, you've had a ton of new investors start entering the space, and a lot of those investors don't really understand and can handle the price swings that Bitcoin offers. And two, as we have had all of these billions and billions of dollars pour into the stock market, a lot of investors are starting to diversify their portfolio. Now, basically what diversifying means is that you're going to invest in multiple different things. This is a way to protect yourself against crashes in general. So if you invest all in one thing, 100% in, say, a tech stock, well, if that one tech stock goes down, then you pretty much lost all of your money. So investors like to invest in a lot of different things. Sometimes investors will put their money into a tech stock, and then they'll also put their money into a cryptocurrency, and then in gold, and then real estate, so that way they have their money spread all throughout the country in a variety of different things. Investors are starting to do this. Traditional investors on Wall Street are starting to do this because of all of the money that is on the New York Stock Exchange right now. They're starting to diversify their portfolio, and when Bitcoin starts to go down, they start to pull their money out. This is because people have been buying Bitcoin that normally wouldn't buy it. And over the last few years, there's been a lot of financial institutions that have been investing in Bitcoin pretty heavily. We have Square and PayPal and some brokerages like Coinbase and BlockFi that are specifically centered around cryptocurrency investing. And some of those, like Coinbase and Square, are traded on the New York Stock Exchange. And because they hold billions of dollars in cryptocurrency, they are actively buying and selling their crypto too. They have huge stakes in the market. I mean, several $100 billion. So if they start selling their investment, you're going to start seeing the price of Bitcoin go down because that is a huge chunk of the market share. All of those crypto-related stocks are down as well as Bitcoin and cryptocurrency starts to drop too. And in 2021, we also had the first Bitcoin ETFs launch on Wall Street. So an ETF is an exchange traded fund. So basically you are buying a share of this fund that invests in Bitcoin. However, this Bitcoin ETF invests in Bitcoin futures. So you have millions of people all throughout the world investing in this Bitcoin ETF. And when the price of Bitcoin goes up, then the investment share that you own also goes up. However, if Bitcoin starts to go down, then your investment goes down too. So while you're not actually investing in literal physical Bitcoin, you are investing in Bitcoin in what its price action does from day to day. And the more people that invest in this ETF and the more money that goes into this ETF, the bigger the pool will get. And of course, if Bitcoin starts to go down, investors are going to start pulling their money out. And we're starting to see this too. So what exactly does this all mean for Bitcoin, our economy, and the cryptocurrency market in 2022? Well, there is a few different things. For one, if Federal Reserve Chairman Jerome Powell actually comes out and says that the Federal Reserve isn't going to be getting that much more aggressive on inflation in the United States, and that means cryptocurrency could actually start booming in 2022. And some experts believe that this measure alone could send one Bitcoin all the way up to $100,000 in value. Obviously, there's no guarantee of that, and we don't really know what the Federal Reserve is going to say because the CPI, or Consumer Price Index report for December 2021, has not been released yet. However, if the CPI report indicates that inflation actually went up in December 2021, that means higher than around 6.8%, and that means the Federal Reserve's hand is pretty much going to be forced. They're going to have to start getting even more aggressive on inflation. Now, in December 2021, they had a flagship meeting that basically stated they were going to be raising rates 3 times in 2021 and that they could start tapering even more by January. In fact, they may be completely done tapering by March or April of 2022, and then they would start raising their benchmark interest rates from there. However, if inflation is even worse, then they're going to have to raise rates even more, which means we could see 4 rate hikes in 2022. They announced that they would have several more rate hikes in 2023 and even more in 2024, and so on. It really just depends on what the economy is looking like and how high inflation is. It's important too to talk about the Federal Reserve's ultimate goal here. They want to see full employment in the United States, and they also want to see inflation that is hovering around the 1 to 3% mark. 3 at the absolute highest. And what you're probably thinking is, well, if inflation is so bad, then don't we want the inflation rate to be somewhere around 0? Well, not exactly, because inflation of around 0% would mean that the Federal Reserve is not printing any new money. And that means that there can't be any more new money coming into our economy. Now, you got to think why the Federal Reserve and the federal government of the United States wants to print money in general. They want to print money because our economy needs to expand. The only way that our economy can expand is through money. You have to literally pay someone to go out and build something or to create something. Anything that happens in our economy happens at first because of money. The federal government and the Federal Reserve, they are currency issuers, which means their goal is to print money to fund all of their programs and to fund our United States. Everything in the United States runs on US dollars. So inflation is going to happen because the Federal Reserve decides they need to print a certain amount of money to grow our economy every year. But when this happens too fast, then you can get to a point of hyperinflation, or just a point where things are starting to cost way too much. Now let's get to the point of employment. The Federal Reserve wants to see an unemployment rate that is as low as we possibly can. That means the most amount of eligible people in the United States are working. That means that every dollar in our economy is accounted for, and every money that they're printing actually has a purpose. Sure, the Federal Reserve prints money, and some of this money goes to banks or bigger institutions and corporations and all of these different types of businesses. But at the end of the day, all of this money slowly gets trickled back down to the people. It gets trickled back down to you, and you go out and spend it. That is the ultimate problem, though, with inflation. The Federal Reserve prints too much money, then there is way too much money floating around in our economy. Some of it's not spoken for, and some of it goes to people who already have too much money. And these people that have way too much money go out and spend this money on things that they don't need, and they start buying things, and that sends the price of everything through the roof. And the reason it sends the price of everything through the roof is because businesses have to start producing more, and all of that costs money. And when businesses and companies have to produce more and build more factories and hire more workers and raise wages, then they trickle that cost down to the consumer too, and everything you buy at the grocery store starts to go up. Ooh, okay, that was a tangent, but the point here is that the Federal Reserve is making moves to combat inflation. And they're doing this to reverse a lot of their policies because in 2020 and in 2021, they printed a ton of money and they gave the American people a ton of money. And some of that money ultimately went to the New York Stock Exchange and the stock market. Billions upon billions of dollars every single month was poured into the New York Stock Exchange. So that way the stock market didn't crash or crash even further than it did back in March of 2020. However, all that money is pretty much getting pulled now. And if it gets pulled way too fast, then that's going to leave investors with a lot less money. And because there are so many traditional investors that are merging and going over into the Bitcoin and cryptocurrency space, they aren't going to risk investing all of their money into an asset that is not promised and is very risky and very volatile just to protect themselves against inflation. I mean, ultimately, inflation is going to go down as our supply chain issues go down, as our labor shortage starts to go away, and our pandemic starts to disappear too. Eventually, inflation is going to go down, and they'd rather put their money into a less volatile and risky asset like an ETF on Wall Street or a different stock. No investment is ever guaranteed, so even if they invest in the stock market, there's no guarantee that they're going to make money. The chance of them making money through Bitcoin is a lot less probable, and that's definitely not every single investor, but for traditional investors, that's how some of them feel. They don't want to put their money into a risky asset, especially not right now, and especially with everything that is going on. And finally, we have to talk about what people think about Bitcoin as a hedge against inflation. Now, Bitcoin and cryptocurrencies are in a very interesting space here because Bitcoin is a natural hedge against inflation. Basically, our United States government can print as much money as it wants. If there's a problem in the country, or they need to pass a bill, or they want to fund something, they can print trillions of dollars. They're allowed to do that as currency issuers. However, the rest of the entire country ends up paying the price through inflation. They might not pay the price right away, but they'll pay it in the years to come. However, Bitcoin is a hedge against inflation. There can only be 21 million Bitcoins in existence. So once that market has reached 21 million, you can't make any more. It's just simply against the blockchain technology. So there can't be any more Bitcoins that can be mined. So as long as Bitcoin remains valuable in the United States and the rest of the world for that matter, you could see the price of Bitcoin explode. However, investors have been going back and forth lately on if Bitcoin is actually a really good hedge against inflation. The reason being is because hedges are something that are universally valued, and they are things that are going to have value when the stock market or our economy starts to crash. A lot of investors have said that Bitcoin doesn't really offer investors this value because the only reason that it has value is because investors think it does. If you look at the difference between gold and Bitcoin, Bitcoin is completely digital. So it exists on that digital space, and there are very few places in the United States or the rest of the world that will actually accept Bitcoin as an acceptable form of payment. Which means the only way to actually sell your Bitcoin is to someone else that really wants it. But eventually, if that's the only case and nobody is accepting Bitcoin, well then what's really the point in having it? Now, if you compare that to gold, gold is kind of in a similar situation. You can't exactly walk into a store and hand somebody an ounce of gold and try to buy something. No, you have to sell that first, but arguments from investors are basically that gold is physical. You can literally see gold. It's like real estate. It holds that value because you can see it, you can touch it, you can feel it, and you actually actually have to put in physical work in order to mine it. Now, Bitcoin, I will say, takes some work to mine, but it's not physical work by a person. It's work by a computer program, which eventually mines the coin and gives the creator a digital code. Once gold is mined, though, you actually have a physical thing, and you can take that anywhere in the world and then sell it for US dollars. You can take a Bitcoin and sell it for US dollars too, but there is one major difference here. Gold is not facing massive regulations all throughout the country. I mean, gold and the gold market is pretty simple. I mean, you have gold and you have gold mining companies, and that's pretty much it. If you want to buy a bar of gold, you can do that. However, with cryptocurrency, you are essentially investing in a technology. You're not just investing in a currency, you're also investing in a currency that acts as kind of like a commodity. Bitcoin and cryptocurrencies are exploding, and they are technologically advanced way beyond gold, which means United States regulators and regulators all throughout the country are going to have to regulate the cryptocurrency market because there has been a ton of manipulation and scams and hacking going on in the space. All of that has been causing the cryptocurrency market to drop over the last couple years. Meanwhile, the gold market, while it hasn't gone up as much as the Bitcoin market, it also really hasn't dropped as much either. Some investors are seeing that and don't want to put their money into something that could potentially go down to zero, especially if people in the world don't really want it anymore. And that's kind of the two scenarios that we have in the Bitcoin and cryptocurrency space right now. Essentially, if inflation goes up based on the CPI, then that means investors are going to have a lot less money to spend. A lot less money because everything in our society is going to start costing more, and because the Federal Reserve is going to start raising interest rates and pulling a lot of their stimulus from Wall Street. Billions of dollars are going to disappear from the market, so anything that investors are going to invest is going to have to come from their own pocket. In addition, a lot of cryptocurrency investors buy cryptocurrency and buy Bitcoin on margin. This essentially means that you borrow money from an exchange, and if interest rates start to go up, then borrowing money is going to cost a lot more. That's going to cut off a lot of first-time and beginner cryptocurrency investors. And just in general, there's going to be a lot less money going around in our economy, so everything is starting to shrink. The Bitcoin market could shrink too. However, the other scenario is if inflation for December actually started to go down. If we see inflation drop below that 6.8%, then you might actually hear the Federal Reserve come out and say they're not going to get as aggressive as they thought they needed to be. That means all of that money is eventually going to disappear, but it's going to disappear a lot more slowly, so much so that the cryptocurrency market and the stock market probably won't feel it as much. That could lead to those two markets actually progressing pretty naturally in 2022, with some experts saying that Bitcoin could actually reach $100,000 if that were to happen. But again, both of these scenarios have not come true yet, so it's all speculation no matter what. I mean, there is a lot going on in both of these markets, and honestly, this is very, very complicated. Always do your due diligence before investing, and always do whatever you can to protect your family and your money. But now I want to hear from you on this issue. What do you think is going to happen with Bitcoin and the cryptocurrency market in 2022? Do you think that inflation is going to continue to hurt our markets, or do you think inflation is actually going to go down this year and we could start to see markets boom in 2022? In addition, what do you think about Bitcoin and the cryptocurrency market in general crashing over the last month or so? Is this an awesome opportunity for first-time investors to get in on Bitcoin at a very low price, or is this a sign for things to come? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.